He was the smart money who was about to sell the thousands of shares he had acquired from the arbitrary XYZ company. He might have acquired the shares during a prolonged bearish period through patience over a long time. In this situation, small traders sold their shares out of fear, despair, impatience, and frustration. So the small traders sold their shares to the smart money in desperation. After acquiring the desired float, he marked the price up and drove it into his target zone. During accumulation, he deliberately controlled the order book to keep the RSI below the 40-50 range. He was now selling by creating iceberg layers in the distribution zone.
Since he held a massive number of shares, he needed to create demand.
Absolutely.
So he triggered the trade-in setups of thousands of retailers, pushing the RSI to around the 60 level.
He was selling in this zone in fragmented quantities. To create demand, he aggressively bought the ask orders, keeping the candles green and pushing the final candle to close high in the last minute.
The next day, many retailers rushed to buy the FOMO spike after the RSI rose above 60 and appeared to confirm a breakout, convinced the trend would continue.
At that exact moment, the smart money had layered the ask side with sell orders without alarming buyers, while maintaining an apparently strong bid support, making retailers believe institutional support existed and that it was a safe buy.